Hi everyone, welcome to the show. We finally see some relief in the equity markets. Cryptocurrencies, on the other hand, remain under pressure, and we'll look into the new market addition, Oatly, which made a good debut in Nasdaq yesterday. We finally see some relief in the US and the global equity markets, a good rebound in the European indices yesterday, followed by a decent progress led by tech stocks in New York, hint that the worries over inflation are easing for now. That's something I was expecting, although these inflation worries will be reheated and reserved to the market very often from now on, unless we see a sustainable deceleration in the commodity rally or soft but not too ugly economic data that would hint at a stabilizing inflation without necessarily hinting at bad economic recovery. So the US dollar softens again. The euro dollar rebounded past the 122 mark, pursuing a further extension of gains toward the 123.50 bullish target, which is the price peak we've seen in January, and the US 10-year yield eased back below the 165% handle. Now, for those who are willing to explain the positive vibes in the US stock markets and elsewhere, we have the choice. Bloomberg chooses to put the emphasis on the better than expected weekly jobless claims in the US release yesterday, which came in below the 500,000 mark for the third week in a row. So that's a sign that the Federal Reserve's policy is working, and if the Fed is forced to start tapering its bond purchases in a couple of months from now, at least a stronger economic recovery will be here to cover investors' bags. But for those who like the bad news is good news theory, we are also served a soft Philly Fed manufacturing index yesterday. Employment, new orders, and business conditions in the Philly Fed index were all softer than expected, except from prices paid, meaning that despite the rising inflation, the Fed would push its boundaries to stay as accommodative as possible, at least in the short run. Now you pick the one explanation that suits you the best, and we move on to New Zealand, where credit card spending rose nearly 90% on yearly basis from below 1% printed earlier, and the flash PMI figures across the globe should confirm the pickup in the economic activity in May, especially in Europe, where most countries eased their restriction measures and are getting back to a normal life from what we remember being a normal life. Also, there are reports that businesses which have a greater exposure to Europe and European stocks should outperform their peers in the coming weeks and months, given that the vaccination efforts in Europe are paying off, and the reflation period should help increasing the appetite in the region as well. So speaking of these European and those reflation stocks, the British Petroleum's positive breakout recently remained short-lived yet again, but the medium-term trend remains quite positive, and the share price is now down to its 50-day moving average near the 305p level, mostly due to a stronger pound and the retreat in oil prices recently. Now, the actual levels could be interesting buy zone for those looking to increase their exposure in British energy stocks. BP is now one of Barclays' best stock picks, one of mine as well. As you know, Barclays analysts say BP is the most misunderstood investment case of all large cap oil and gas companies, and its switch to low carbon will eventually be rewarded by investors, by the market. Now, speaking of that carbon print, by the way, Bitcoin, which got shattered last week after Elon Musk voiced his environmental concerns on Bitcoin's high energy consuming mining process, Janet Yellen's Treasury Department gave another punch to the crypto investors' face yesterday, saying that businesses receiving digital tokens worth more than 10,000 US dollars should report it to the IRS. In one sense, it's normal, isn't it? The idea behind cryptocurrencies is to have a financial revolution, not to have a broad tax evasion tool, right? So in theory, this kind of news should not dent the long-term investor appetite, but alas, Bitcoin is struggling a touch below the $40,000 level right now. Technically, we are in the bearish consolidation zone, so I expect a further bearish consolidation to be on the menu of this weekend, and Coinbase continues being hammered as well, which justifies my theory that the good volatility, so when people rush to cryptocurrencies, doesn't have the same impact than the bad volatility, so that's when people rush to the exit. That's normal, but in terms of transaction fees, all volatility is supposed to be good if the sell-off remains temporarily. So the next important test in the Coinbase price is the $200 per share level. A slip below this level could keep the downside pressure intact on the quite unlucky new member of Nasdaq. Now, we often talk about revolution in money, the cryptocurrencies. Let's now talk about revolution in food. Oatly Group's shares also made their debut at Nasdaq yesterday and saw a quite warm welcome from investors, the type of welcomes we love talking about. So Oatly is a Swedish company that has been thrown by two Swedish brothers, and as its name indicates, it offers a variety of vegan foods made with oats, including milk, yogurt, spread, cheeses, and so you can take a look at their website, actually, oatly.com. It's quite nice. You have that cocoa oat drink, which looks amazing to me. They have a bio range, and ice creams that look delicious. They are already in more than 20 countries, including Switzerland. I must read positive stuff on the company nowadays, and media is clearly behind them, as they are also backed by the world's most famous celebrities, including Oprah, Jay-Z, and Natalie Portman. Hedgeye thinks it could become the next great global consumers product company, while an analyst on Seeking Alpha says that Oatly is a money-losing firm that has no clear path to profitability. So some investors also question, how is it possible for the company to be losing money? Because it is losing money right now, given that oat is cheap, cheaper than almond, for example, which is one of the favorite alternatives for milk for non-dairy dairy consumers. Now, one explanation could be that they send their products from Sweden right now until they build plants closer to their markets. Anyway, the important is what Wall Street investors think about it in terms of market pricing, and they think it's not too bad. Oatly's shares were priced at the high end, near the $17 per share level at the IPO, and the price of a share traded past $22, more than 30% higher in the first few trading hours, as the company offers a revolutionary product range that fits perfectly in the actual vegan and pro-environment trend, and will likely attract the attention of ESG funds, so the environmental, social, and governance investing as well, which is very popular these days, which overweigh the environmental impact of their investments rather than the financial metrics only, and the no-call Oatly could tick the boxes for that. Just one thing though, at the current valuation, the price stands somewhere near 24 times last year's sales, relatively high compared to Beyond Meat's 16 times and Danone's miserable 2 times. So there is a good deal of goodwill price in here, and that could be some negative pressure on the current valuation in the short run. We need to wait a couple of more days and weeks to see how things shape up in terms of pricing, but I think it could be interesting, especially if you have Beyond Meat in your portfolio, to add some Oatly shares as well. But waiting a lower price maybe could be a good idea. Also, you should keep in mind that competition will be tough because big traditional names are not twiddling their thumbs in the dairy. Nestle, for example, has developed a pea-based alternative milk brand called Wanda, and it even offers plant-based dairy meals for babies, which taste fantastic. By the way, they use coconut milk. So back to Oatly, price-wise, one-day trading doesn't mean anything, obviously, but it looks like we see a first support for forming near the $20 level. I expect to see some buying interest in the short run within the $17-20 area, and if it holds, then we could see a similar trend to Beyond Meat, which saw its price multiplied by more than 5 in the weeks following its IPO, even though we see a clear downside pressure and some stabilizing near the $100 per share level nowadays. This is all for this week. I'm İpek Özkardeşkaya, and thank you for joining me. I hope this episode of Market Talk has been helpful and insightful to you. Please do not hesitate to leave your comments, your questions, and your reactions below, and follow us on Twitter and on LinkedIn for regular market updates, and also subscribe to our YouTube channel for daily market comments. I meet you again next week, and until then, good day trading and have a nice weekend.